Hey ForexMilitia, Possible here again with the calendar and the charts and the picks for the week of, here we have it, actually for the 12th to the 17th. It's here too. Well, I thought I'd be dramatic bringing that up. So, anyway, this week was very interesting because the rate decision on the Aussie won. The CPI on Friday came in hotter than expected, causing the stock market to tank and the dollar to rally. And a good number that came out from Canada for unemployment and their unemployment rate. This caused the loonie, the CAD, to actually rally higher. So the dollar was actually stronger than the CAD. All right. So let's go on to this coming week's calendar. And we have the PPI on Tuesday. Nothing on Sunday or Monday, really. No high impact news. And on Wednesday, we have the core retail sales. This should be something big in the U.S. All right. Legrand actually speaks. That should be something. ECB. They've got a orange news, but I guess that's because they don't know exactly what she's going to say. FOMC. The FOMC. Now, because of the high inflation that actually came out on Friday, they are basically looking to see if this is going to be 25% higher. So the 0.50 basis points could be 0.75 because they're going to start their conference on Tuesday and into Wednesday. And we'll see exactly if they decide to make it even higher. Okay, then the Aussie unemployment change and the employment, the employment and the unemployment change, and then the Swissy rate. And the Swissy looks like they're going to just keep that flat. And then the Bank of England, the BOE, is going to raise 0.25 basis points. So that's huge. Everybody's tightening. And then on Friday we have Chair Powell speaking. Nothing really big coming out. Retail sales for the pound. And then something on Saturday. Waller speaks on Saturday. FOMC, he speaks on Saturday. So I don't know exactly what that's about, but that should be interesting that he is speaking on Saturday. All right. So that's the week, which is going to be a pretty. This is a strong news week. All right. So let's get over to the charts and see what we can see. Please like, comment, and subscribe to this channel to support. And let's go. Okay, here on the dollar, we have what basically happened. It was on Friday. It really took off. I have a position on, and I'm close to the TP on that position going long. And we have the COT report, basically long, and additions to longs and shorts. So the smart money, the institutions, are staying long the dollar, and so should we. So my basis is long. On the US 30, the dollar went long, but the market went short. People are getting out of the market right now. They're funneling over to the sidelines, and I am looking to see. Wow, yep, that's the number. I'm looking to see if the market will actually get all the way down to 26,100, 111, right around this area here. It's in a downtrend as of now. If I'll have to see if this actually breaks below the 200. So we are short, so it's a smart money, and they're reducing their shorts and adding to longs, which is interesting, but they are net short. On gold, gold is long. COT is basically saying that they are long, adding to longs and reducing shorts. And so my bias is going long. I have a position on that I just took that is basically going to take us all the way up into 1970. So we are going long on gold. On Bitcoin, we are slightly tilted to the short side. I mean, well, the COT is slightly tilted to the short side, but I am short Bitcoin. Now, the reasoning is because I believe that in this time right now, the market has consistently shown that upon the halving of Bitcoin, that time after, like directly after, that is when Bitcoin rallies. So we are going to be in a bit of a drawdown up until that point. Now, if regulation comes in, that might change my bias, but for right now, I'm going to basically go with the market being short until the next halving, which is going to be in about April, probably May of 2024. So that's a whole 2 year, like year and a half from now. I'll say 2 years, 2 years from now. So if anything, dollar cost average in, and let's go. All right, oil. Oil is basically long. It basically diverged for a while. That's why I have this here. I have a method of basically measuring out how to basically find targets for divergences. And I have to give a shout out to Matt Kaplan for giving me a piece to a puzzle, a part of the puzzle of basically helping me to find the divergence. I was already trading divergences, but he gave me a piece of the puzzle. So if you want to, you should check out Matt Kaplan's channel for basically divergences. He talks about smart money concepts. He talks about head and shoulders and things of that nature. Very informative, very informative. I have to give him a thanks and a shout out. Okay, so on oil, we are long. We are staying long. The war in Ukraine, Russia being taken out of the OPEC and basically trying to reduce their income on funding their war. So oil is basically getting a bit scarcer. But the Arabs are going to shore up that shortfall in supply. So there you go. They're not going to create a glut. They're just going to shore up the supply. So I see oil continuing to rise. On the loonie, as you can see, it came down. It actually hit. It's so incredible. It hit that 78.6. It went a little bit further down towards this 88, but it bounced off that 78.6 and rallied. Now it's rallying off of that 78.6, which is incredible. It did not. It stuck with this trend. My basic look for the CAD for the loonie is to go be long, because the CAD is still short, and as you can see, there's a heavy addition to longs, and a smaller addition to shorts. So what happened here on the COT is they went kind of neutral. Okay, I think I was supposed to put that in here. Let me go ahead and put that in here really quick. It's more neutral. Let's take that out of there. So, being that it's neutral and the dollar is bullish, this will basically most likely go long. And as you can see, there's a target up here and a target up here. So, bullish CAD. All right. On the euro, we're staying short. This is still short. There's a lot of lines on here. I know. It looks a bit messy, but that's part of my trading. I know I don't look pro, but each one of these lines actually means something. Like these lines here give me some support and resistance, and on top of that, you have the pivots. You know what? I'm going to take the pivots off because the pivots are very strong targeting system for daily for taking my targets, but you don't need to really see that. So okay, I took it off. Alright, so once again, the euro is short, and we are basically looking for this to, I actually believe that it came all the way down here. There could be a retracement up into the 61.8. Now this line right here, I don't have an arrow. Do I have an arrow? Yeah. Let me see if I can put an arrow right there. You already see what I'm getting at. This right here is basically a line that has been drawn all the way back to here, and it has respected this line over and over and over again. So what I'm thinking is that the euro might actually get a little pop, that it'll retrace a bit. Okay, even though I see it's going short, it could retrace back up to this line, to the 61.8, and then take another fall. So there'll probably be some divergence, something that basically happens because the dollar right now is heavily long. So they're probably want to look to start taking their profits up around the highs of where it's at. So that would be the only reason why this, being so short, would actually go long. But the whole the COT has the euro long, but it's not stronger than the dollar. Okay, so now they reduce their longs, and there's a smaller reduction in the shorts. All right, but this is still long, but it's just not stronger than the direction of the dollar. Okay. All right, and on the pound is short. So off of that, I'm gonna just go ahead and say that they are adding to their longs and a reduction to shorts. The smart money is adding to the longs. So as you can see, that takes this up here into this area here, the 618. And so being that I believe that the euro is going to do the same, it'll come back. Now, saying that is going to happen, knowing exactly what's going to happen next week, that they are going to possibly raise the dollar's interest rate from 1 to either 1.5 or 1.75, that, be careful, okay? If anything, if you take any position dollar long, I would not suggest that. I would suggest to wait. I would suggest to not really take any positions next week until you see what the Fed actually is going to do, because being in the markets for as long as I have, over 10 years of trading, that can create huge amounts of volatility that can easily knock you out of a trade. Basically, what happened here on the on gold, if you go down to these lower time frames, you see a huge move. This is incredible. All right, you see on the 4-hour how that it went all the way down there and then it popped all the way back up. That can easily happen on these dollar pairs. All right, so be very mindful and careful of that. And so with that, I'm basically going to move over to the TradeMiner picks of the week. Please like, comment, and subscribe, and let's get over to the picks. Okay, here we are on TradeMiner 5.0 Forex, and we are going bullish on the Swissy yen. All right, and that is we've got an 80% win rate with 5 years of data, no probability, 4 years of calculation. Okay, and then we've got Merck coming from Seasonax. Sometimes I call it syntax. I have no idea why I do that, but Seasonax. And we've got Merck basically from June 14th to August 17th, that's a long stint, right? That's straight through July with a 31% annualized return. And something new, I am going to start doing futures. There's also something that I wanted to basically give you an update on, how I'm going to basically start to trade TradeMiner, which is something different. But right now, let me just get this through. We are going bearish natural gas, the March contract from June 20th to July 21st. 19 years, 80%, a win rate of 89% with a medium probability. All right, and what it is that I'm going to be doing that is new is I am going to go 2 weeks ahead with my weekly outlooks. Not my weekly outlooks, but my TradeMiner weekly picks. All right. So what I'm gonna do is I'm gonna watch the charts and see if I can actually take a position before or during the time period before or during the TradeMiner pick of the week. Okay, so I'm gonna so I'll know about this market cycle a little bit ahead of time, and I'll be watching it to see if I can basically take the move a little before or during the market cycle. So that's something a little bit different, okay? Since I know forehand when these cycles are coming up, all right? And so with that, you can basically plan your trade ahead of time, okay? All right, so let's get over to the chart and see exactly what I'm talking about. All right, so the first one is the Swissy. Let me see. I put it up, but I don't think I put it on there. Okay, I didn't mark it up. Okay, so I'm gonna take a short break, and I'll be right back. Okay, so there we go. It's all marked up now, and now we basically are just looking at what exactly is going on here. All right, so on the Swissy, on the Swiss yen, that's not the Swiss yen. All right, Swiss yen. Let's take that off of there. Okay, so we are basically a little bit ahead. So we are looking for long positions. So what could happen in this next week is if this falls off and we get a signal down here in the oversold zone, we can basically take this long ahead of that, or somewhere in this area over here, because we know that this area, the statistics have it locked in that this is usually a long period for the last 5 years. Okay, so we're going that way, all right, long. All right, the other one is Merck, right? Once again, we're going in a little bit ahead, and we want to try to figure out if we can get a long position that comes into effect. Now this one is closer. This one is basically next week. The 14th is, was that Wednesday? Where's my calendar at? Yeah, something like Tuesday. Okay, on Tuesday. So this one is a little bit encroaching in ahead of my prediction area, right? Okay, and then we have nat gas for, all right, that one, and this one is short. So what I see here on nat gas is that we are in a divergence, right? And this is what I learned from Met Kaplan, and it's we start counting from the first initial, right, where the divergence actually starts. 1, 2, 3, 4, and this is on its 4th divergence. So what I did was I basically took this here, I took this here, and I basically measured out, okay, I measured out what it would be from the top of here to the top of here, and found a target area down here, right, within the within my pivots. Okay, so I would be looking to basically when this basically starts, actually I could take it now, right? I could take it now and know that within this market cycle, in this zone, we have a high probability for the last 19 years to actually get to this target here, right, off of this divergence. So it's very possible. So what I'm not doing anymore is taking the blind trades. Okay, now we are looking to basically take trades that are that have a higher probability, a statistical high probability to basically be profitable based on seasonality and statistics. Okay, now the reason why I'm doing that, I'm going to show you why I'm going to do that. Now last week I was at 94k, so let's go into the review. Last week I was at 94, 93. Now I'm at 128, 131. You know, open profit is about 2,000. What I did was I took some trades on the dollar, on oil, and on gold, and that I actually made a small mistake. Well, I can't say it was my mistake. The way how the trading view percentage, risk percentage put me in, it put me in at a extraordinarily high amount of shares. It did not calculate it properly to me. Okay, and it worked out profitably for me. Okay, so now I am up 128. I'm up like 40k, 30-40k now. So I had a good week. Okay, barring that there were some mistakes made, but it came out in my favor. All right. So with that, we actually are in a drawdown on Amgen. All right, this was long. Okay, let me take a look at last week's. Right, we did Intel and we did the pound. Okay, so on the pound, which is short, we are positive. On Intel, we are very positive, going short, right? And what I did was, before the CPI actually came in, I took some partial profits because I had no idea where that big news was going to take it. So I locked in some profit, and then I placed my stop at break even plus some dollar amount. All right, so I did that on basically all of these. I reduced. Okay. I also took a position in the UK 100. All right, and I'm actually running a positive on that one also. All right, but a couple of trades actually did close, and let me make sure I get this. Okay, so we had McDonald's during last week, the 9th. Let's see. Right. So McDonald's closed. Right. That came back to, that stopped out. There's the dollar trade. Amgen. I took some off of that one. Right. And I left the rest. This is also, I took some off. The pound, I took some off, and that actually, this went into positive territory. Here's oil. I got 6K from oil. I got 1,000 from Intel. All right. I got 420 from the UK. I got 2K from the Dixie, and I got 1,700 from oil. So that all adds up to me being positive for the year, with help from TradeMiner. Okay. All right. Also, like I said, there were some mistakes made, but there you go. Positive mistakes. All right. Okay. So with that, I'm going to go ahead and say, once again, you guys need to trade with the smart money. Follow the COT, because the closest thing to the Holy Grail is trading with the smart money. And so, knowledge is power. Be power hungry, and power to the people. Please support my channel. Please subscribe. Leave me some comments if you have any questions, and give this video a like. This is Parsival, signing out.